Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, November 6, 2018. In this video, I want to do an update on commodities, particularly the agricultural commodities. It's a sector or an area, I should say, an asset class that I've been focusing on. The last update, it's been a couple weeks now. Last update looks like on the front page at least was back on October 15th. So I wanted to do another update. Before I roll into that, I just wanted to make a few comments on the broad market and the site in general. I had a question put to me, well, a couple questions recently, or comments, I should say. One was the lack of trade ideas, official trade ideas lately. And my reply to that is something that I'm doing things I believe a little bit different with this site. I focus on quality, not quantity. I know a lot of people think you get more bang for your buck or your money's worth if you have a lot of trade ideas. My personal, experience in trading is don't try to force trades when the market conditions are not conducive or the near-term outlook isn't very clear. I've been clearly leaning towards, clearly bearish for a while off the tops and then also very cautiously bullish for a while down here. But recently, as you can see, since October 31st, this is what the market's done, at least QQQ and SPY similar. We're trading in a choppy trading range. Now, I've laid out the bullish case and the bearish case. Bullish case being the technicals right now, the 60-minute are pretty bullish, but the longer term charts are bearish. And as I said, this rally um, could be sold into at any moment. So as I made mention, I posted an update in the trading room. I was out this morning on an appointment. I don't think right now is any time to be getting aggressively short. Active traders can trade this market as they want, but I'm holding off on swing trades, both long and short, because the near-term direction for the next few weeks. Remember, there's active trading, which is a lot of what I post. I post a lot of trade ideas in the trading room, futures, ETFs, stocks. Those are anywhere from day trades to maybe short-term swing trades right now. That's the time frame that if you are going to engage this market, that's where I think you're probably going to have your best opportunities. And as I said, you can certainly short bounces back to resistance as a swing trader, or even go long on pullbacks to support or breakouts of resistance levels as swing trader as well. But as far as the official trade ideas, those are the ones I have the highest degree of confidence in, and I don't have the highest degree of confidence where this market's headed for the next, let's say, few weeks to couple months. That's swing trading time frame, a few weeks to a few months. And like I said, I suspect we're going to have another sharp leg down. And if my confidence becomes higher, and that could happen very soon, if I see enough in the charts here, I may start adding some trade ideas back. So I just wanted to share that, and I'll continue to pass along unofficial trade ideas, things that stand out to me, objective levels, and you're welcome to ask, hey, I want to go long or short this. What do you think? What are some levels you'd look at? That I'm glad to provide. So until my confidence is a little higher, the trade ideas will remain light, but then, as you know, I may start adding actively, like a couple months ago, heading into October, adding a lot of new short trade ideas. They're all on a watch list, ready to go. The other comment too that I had, and this was a couple weeks back, somebody made mention that they were planning to, take all the official trades. The official trades on the site, even the unofficial trades, are far from a comprehensive portfolio. They're trade ideas that can supplement your own trade ideas, your own portfolio, whether you're a long-term investor and you want to put something into longer-term trade ideas, or a swing trader. But remember, if you're looking at the official trade ideas, you're not going to see a full balanced portfolio of a dozen or more positions in various sectors. I try to keep a balance as far as the asset classes and sectors and everything else, those that stand out. So with those 2 points out of the way, expect that we will probably add some trade ideas here very shortly, particularly in these agricultural commodities. Let's go ahead and dive into those charts, and I will follow up with an update on the market later today. But so far today is typical of what I'm expecting. The reason that where I'm not, adding a lot of longs or shorts right now. We had a big rip up today after successfully back testing here on QQQ, and then that rip was sold into pretty hard so far, and they faded over half of the gains. QQQ was up over 1%, and now it's only up about a half a percent. All right, on to the commodities. All right, well, no particular order. Let's go through these. And again, I'm going to focus on the ag commodities. I'll do industrial metals and or precious metals and crude oil, natural gas. That'll be a whole other update. There's enough in the ag commodities arena to warrant a whole video. So let's go and dive into the charts here. This is NIB. This is a cocoa ETN. I may look at some futures as well, but most of these commodity ETNs, from my experience, the ag commodity ETNs do a pretty darn good job of tracking the futures that they invest in. You remember that ETNs, they are not buying physical, in this case, cocoa. They're investing in cocoa futures, and most do a pretty darn good job of tracking. So therefore, that's just, the preferred trading proxy for the official trade ideas. Even if I trade futures personally, I know a lot of traders don't have access to futures accounts. With that being said, you will see me from time to time confirm what I'm seeing on the charts of these ETNs, and I'll confirm that with the longer term charts of the futures, because over time they can drift. They may not track the price of the actual commodities or the commodity futures perfectly. And I may jump over it as I do this video and verify. This first one, NIB, is cocoa. You can see a downtrend line. In the last video, we were here, and I highlighted this bullish falling wedge pattern. This line here, this is your divergence line really at the bottom of the bullish falling wedge pattern, shows the bullish divergence, and this is our downtrend line. And I said at this point, we were somewhere here a few weeks ago, I said NIB or cocoa may or may not need one more thrust down within the wedge to break out, and it certainly didn't need it. It went ahead and broke out, and it's moved up pretty nice since then. I had a target right here. I'm going to add one right now. And I'm considering adding this one on. Now, I usually like to take breakouts right when they occur, but I can tell you the thing about commodities, just due to their nature, there's storage issues, there's all types of environmental issues, with climate, crops, and all that. And what happens is they tend to have some pretty strong trends, pretty strong rips and dips. You can see here's a sharp downtrend. There was a period of consolidation. Even then, we were able to, successfully swing trade. You can see some targets here. Both looks like on the long side. A couple targets hit back then off divergent lows, but what I wanted to get at is overbought can become a lot more overbought. When commodities want to run, they can really run. There's a run on NIB. I'll try to give it to you in percentage terms. That was about a 64% run. And so we are, yes, we're overbought or getting close to overbought. Actually, we're not there yet, at least on the RSI. But don't underestimate how much more this could go. So I may continue, I may add some as an official trade here. Even if I don't, I do these videos. The vast majority of the trade ideas on the right side of the chart are unofficial trade ideas, either trade ideas in the trading room or on the front page in these videos. For example, if I find a sector that I like that I'm bullish or bearish on, or in this case, commodities, I'll cover them all in a video, and then feel free to add those into your portfolio if you think that's a fit, something that you want to trade. I like commodities because it's a different asset class, completely separate from stocks, completely separate from bonds. They march to their own drumbeat, and so it's that whole theme that I've been talking about of asset allocation and diversification. So NIB looks good. It is getting a little stretch, and it is at resistance right now. Let's look at this cocoa futures, and you can see the similar chart here. And again, it mirrors NIB very well. This is a divergent low right here, just like we had a divergent high up at the top. There was our divergent high that led to the correction. So these are the same things that I look for on individual stocks and other ETFs and sectors, as well as a broad market. I look for on commodities, and technical analysis works exactly the same, whether you're trading a commodity, whether you're trading gold, oil, pretty much anything that you can chart and has a lot of trading activity, the same premises tend to work just as well. So there it is, and you can see there's a lot of upside potential targets. And what I look at, the bigger picture is in cocoa and a lot of these commodities, is what I believe to be a basing pattern. This was about a year-long basing pattern that cocoa broke out of here, had a big rip up. It's come back in. It tested. It came back down a little bit within the pattern, about the midpoint, but so far it's moving back up. And again, keep in mind that the majority of commodities are in multi-year vicious, coming off the bottom of what appears to be multi-year vicious bear markets. There are also many of these are at their low end of their range. Let me show you here. Let me try to see if I have a weekly chart on cocoa. Yeah, here we go. So here's a weekly chart, And this one goes back 10 years, and you can see a lot of these commodities at the lower end of their range or decade lows. And commodities, remember, have a certain value. Certainly prices can go up and down depending on supply and demand, but at the end of the day, they're not going to go to zero. Cocoa isn't going to file for Chapter 11 bankruptcy protection. They're not going to have a drug in phase 2 clinical trials shot down by the FDA because people are getting sick on it, like a biotech stock. So you have some type of intrinsic value or a floor, if you will. And that floor can vary over time, but you're not going to lose everything. So on the flip side, you're not being paid a dividend. So if you get caught in a sideways trade in those, then you're going to you're not going to earn anything. You're going to have a dead money trade that can last for, in this case, up to a year or so. So that's food for thought. So I like to get in. Excuse me. I like to get in on these when the charts are set up, clearly indicating a trend reversal, a bullish or bearish move. Get in and capture most or all of that trend if we can. All right. So enough on that. That's just my thought process with commodities, and now we'll look at the rest of the charts. Do that. Go through these a little bit quicker. Wheat. What I see on wheat, I had a trend line here in the last video I highlighted. We dipped below that, but it was a brief dip below. We're back testing that trend line from below. But what I like about it since then is, and I think I may have highlighted at the time, at this point here, from here to here, that dip down below the 612 support, it put in bullish divergence, at least on the PPO there. We kissed an oversold reading on the RSI. And again, 612 has been recovered. So we dipped down below it, and that's a pretty decent support level. You can see how well it's acted as support in 2018. Earlier, at the beginning of the year, we were below there for a little bit, and it acted as resistance. That helps to validate that level, support back here, and we popped above it. And that was a little brief fake out move, and it led to a nice rally. So this was what happened again. We had a brief dip below 612, probably sucked in some shorts, scared out a little bit longs, and that can be bullish, especially if this minor downtrend line. That's not a very significant downtrend line. So wheat is one of the better looking ones in my opinion right now. Here's a quick long-term view. This is a 20-year chart. So here's 2 decades going back to the 2000. There's the dot-com bubble all the way back there. There's a very long-term trend line that wheat is still up above. We had this downtrend. I haven't updated this chart in a little while, but well, I won't annotate it now. This is the part I don't like about stock charts. It's so clunky. You have to enter annotation mode. But there are reasons that I keep an account at stock charts. They do have some charts that some of the other providers don't have. But there was a downtrend line taken out. And again, you're not too far off long-term uptrend line support. And we recently kissed that support. We had 2 tests of that support level there and there, successful tests, and we're moving higher. So we could continue to move up. That would be my expectation. We had a divergent low back here. If we come back down, that would be another buying opportunity there. But as of now, I just showed you the charts on the ETN right here, and that's what I'm looking at. So this one may be on as an official trade deal soon, and I'm also going to give you some alternatives to trading any individual commodities. There are some commodity ETNs that hold a basket of various ETNs in there. This is cut, one of the timber ETFs. This is the only soft commodity ETF that, or I guess that would be hard commodities. They don't actually hold lumber. They hold lumber and timber companies, not the actual lumber contracts. There are lumber futures, but this is not what they hold. And you can see this one, I was been bearish on this one for a while, as well as its sister ETF Wood, WOD, just recently hit a support level, but I don't see enough to really go long right now. I think this is just a bear market rally, counter trend bounce. So I'm going to stay away from the lumber and timber sector right now. Let's go to, there's aluminum. I'm going to skip that one. There's wood. Wood fell a little shy of that target there. It's bounced back to resistance. I'm not sure if I would short it. I'd just stay clear. It was very deeply oversold. So I'm just going to step aside that trade for now. JJGTF. This is a grains total return ETF. This one, if I'm not mistaken, holds 3 grains. It holds soybean, wheat, and corn. So if you want to, one shot fits all, and I'll get to those individual charts in a second. This one looks really nice right now. You can see a pretty well-defined downtrend line. You had a bullish divergent low right here, which is bullish. And again, my trading style. There's other variables that go into play, but the simple wash, rinse, repeat stuff. Look for these divergent lows. There's your bullish divergence, bullish falling wedge, breakout, back test, boom, big rip. Another falling wedge, or at least a divergent low, not so much of a falling wedge, but we had a downtrend line as well to trigger a breakout. Came in and back tested that one also and moved up. That terminated in this rising wedge type pattern. We had a divergent high right there. There's your trend line. There's a negative divergence that told us that a trend change was likely. And as I often say, these divergences don't always play out. They don't have to, but much more often than not, they do. And I'd say 90% or more of the time, they do play out for meaningful trend reversals. And when I look at this chart, I can see the possibility these divergences could be extended. Right now, here's the easiest way for me to explain this one. We're at resistance. Trading 101, TA 101 says you either short a move, a run into resistance, or if you're bullish, you wait for a breakout. But you don't go long. It's contrary to trading. You don't go long at resistance because just a small pop above, and then you have a breakout. Ideally, you want to see that breakout become on increased volume. I like to see 1.5 times or better the average 60 to 90-day volume, and that's more so for stocks, but you can also, it does help to see it on commodities as well, or these commodity tracking ETNs. So either way, I think this is one that you could certainly maybe scale into if you're looking to diversify a portfolio, continue to add if it comes on down. Pick your stop where you think it might go. And if I put this as an official trade idea, I will have specific entry points and stops and price targets and all that. Right now, I could certainly add some near-term targets, but I'm looking for more of a longer-term bottom in these. This is a weekly chart, and you can see just vicious bear market and nice downtrend lines. You have bullish divergence as well here on the weekly time frame. So what I'm looking for are trend trades here. I'm looking to catch what could be a major bottom in these in a trend reversal. That instead of looking for maybe low double-digit returns, we might be looking for mid to high double-digit returns if we can, get into a trade and eventually this long-term downtrend line gets taken out. And remember, these are grains. So at some point, especially if we are in an inflation or going to be in an even higher inflationary environment, with all the easy money the Fed's printed, there's a big debate out there. Will the economy start to overheat? Is it overheating now? And if so, in the past, usually when you have strong economic growth, inflation follows. And so you can look at this as inflationary trades because these are commodities. They should go up with inflation. And here's corn. CORN is a ticker for the corn ETN. Nice divergent low, nice looking charts. Like I said, a lot of these that I'm going through, and again, I've highlighted these in recent weeks and months. In fact, I'm always doing updates on the ag commodities over time. Divergent low, rally. Divergent low, rally. Up to the divergent high, get out. So that's what we're looking at right now. We're recently coming off a divergent low and just looking in the past. And remember, these rallies were bear market rallies. These divergent lows were simply counter trend rallies in a longer term bear market in corn and a lot of ag commodities. And I'm not saying it is, I'm saying it does certainly have the possibility to be. If this is a bottom, we're at a bottom or near a bottom in many of these ag commodities, then you may be looking at, instead of just a rally like that last one there, and looks like we had a first target here and maybe got out. I don't see T2. I can't remember where that was. But that one was good for about a 12% pop in corn. We might be looking for, a 20 to 30% or more rally in corn prices off the recent lows. Let's take a look at the long-term chart. There it is, nice bullish divergence in the long term. And here's that bear market that's taken this ETN down from, it's about 70% since the 2012 highs. And here's my corn weekly chart. This is corn futures. When I go to these stock charts here, you have $ corn. Those are the futures continuous contracts. So what they do is just splice together. A continuous contract is they just keep rolling them over. Gives you a longer term price history of the futures. And what stands out to me is there was a low point here in corn, but pretty much since going all the way back to late 2006, early 2007, this support zone right here has been the bottom end of the range of corn prices. And so we're just looking, basically investing, or TA 101, looking to buy a security that's at the low end of a range. Yes, it has been a dead money trade, bigger picture. but there are certainly some rips and dips to be traded within that range. And again, a lot of what we're looking at now, we'll go back to where I just was looking at the daily chart. That was just a 10-year weekly chart. So let's go to DBA. This is the Invesco DB. I guess that's the Deutsche Bank Agriculture ETF. And here's the components here. You can make those out. If you want if all these charts are making your head spin, and I do like to, as an active trader, I like to go into the most bullish commodities, short the most bearish, or avoid the most bearish. But if you want a one size fits all agriculture commodity ETN, again, ag commodities, this isn't going to have metals or oil or nat gas. It'll have, as you can see here, wheat. And be cognizant of these weightings. If you are going to trade wheat or you're going to trade JJG, which is has those three grains I told you earlier, wheat, corn, and soybeans, you're going to have an overlap here. So this one, and I haven't updated this in a while, but it won't change too much. As back in March, 14% wheat, 13 corn, 13 soybeans, 12 cattle, 12 cocoa. You can see the returns right, or the percentages right there. So here's a nice way. Longer term investors, you don't have a lot of time to update your trades and you don't want to trade actively, but you want some exposure to commodities. I like this one. I mentioned it, liking it back here. We had a strong bullish divergent low right here, bullish divergences, falling wedge. We broke out, back tested, and then boom. Now we've run up to my first resistance level or target. That's about 1781, and we've hit that. However, I do think we'll break out. We've been consolidating. I mean, we hit it almost to the penny. I believe that would have this. I don't believe I've modified this chart since the last video. Maybe I have. I can't recall. But I can tell you that a breakout, an impulsive break above 1781 or so, will most likely be the catalyst for a move up to that next target there, about 1835. Take us up there, and again, eventually quite a bit more. Here's a long-term downtrend line that comes into play here, and if and when that trend line gets taken out, and I can tell you that's an ideal swing target. If you want to go in here, maybe hold off for a pullback around 1835 if we get one. But then I think we'd rally up to that trend line, have a reaction, and eventually go on to break out. And if we break out, that would be longer term bullish. That would have longer term bullish implications that might send this one a lot higher. But as of now, looking near term, and you can also, if you're in this one already from the last video or any of the previous videos, or you took it on your own, there's a little bit of a trend line. I'm not so crazy about that trend line. Let's just watch this level here. So I think what's happening is it's consolidating the recent run up, digesting the overbought conditions, working off those overbought conditions, and I think we'll get another thrust up, like I said, ultimately to at least that trend line and quite possibly beyond. Next up, soybeans, nice divergent low. See the same common theme, especially with those three, the grains, soybean, corn, and wheat. You can see bullish divergence right there. That's what I like to see. Last time I pointed out a bullish divergent low, or at least on this chart here, was back here in 2017. Nice, same story, divergent low, trend line break, and a nice rip. And these are what you want to trade. You know, even from the breakout, not even going from the divergent low, just from the breakout alone. That was about 11% rip in very short order. That's not much more than a week, less than 2 weeks of trading. So get in, get out, and once again, that was a bear market rally. So if soybeans are putting in a bottom, and only time will tell for sure, then the potential on a breakout or off this divergent low is a whole lot more. We may come in and then we start looking at longer term charts. Here's a long-term weekly chart, 10-year weekly. I can go over here to stock charts, see what I have on soybeans. Soybeans, go to a weekly, see how if this one's marked up. Let me look at my other one. Weekly here, this one might fit better. Here we go. This is a same weekly chart, just a little bit larger. So what stands out? There's certainly some support around this area. We've had a couple dips below it, and there's the horizontal, or support line. So if we can get back above that line, this recent dip below will be a fake out, aka bear trap, just like this one back here. And again, this is a weekly chart, so we had divergence on the weekly that led to that rip, and maybe we get a similar one here. We have bullish divergences I just showed you on the daily chart. Again, this is a weekly chart of soybean futures. And of course, there's sugar. This was our last official trading proxy. and we ran up, hit that first target almost to the button, reversed. So that's one thing. And I pulled this trade early. I had these additional targets, and I still think we'll get there. But the reason I pulled this one, I mentioned I wanted to recycle back in on the next trade into SGGFF. Plus, I was expecting a pullback here. So this one, I think we took it somewhere here on the breakout of this bullish falling wedge. Um, it came close to running the stop, but never did. It came tested that low again and then rallied up. So that's a nice looking chart here. It's trading very well to the technicals. That first target was not a randomly placed, arbitrarily placed level, nor were these additional targets. There's support up here. That would be our next target. But let's look at SGGFF because it's actually tracked sugar a little bit better. And this is what I always traded with in the past. They changed the symbol and did some things here, but I think this will be my next trading proxy for the official trades. SGGFF, IPATH, Dow Jones, USB, Sugar, Total Return Sub-Index ETF. This would be the next target up. I might have to adjust these targets. Yeah, this would have been the first target here when Kane hit, it reversed. So I like this one now. Now it's already pulled back. It's coming up to support now. It's just above support, and I may add this one back as official trade soon. There was support right there, resistance right here, and that's about the 23, 25-ish level. And so a pullback there. If that level gives way, there's support not too far below, but I think this one is probably poised to come on up and make the next thrust higher and go on and hit that second target, and then eventually that third target up here around 30. That might have been from an older trade, I can't remember, but I still think we make it up there to that level. Sugar's looking pretty sweet on the daily chart here. Let me take a look at the long term. Here we go. This is a 10-year, no, 15-year weekly chart. Looking even sweeter here, pun very much intended. So here we go. This is a big reaction low back in 2015. We successfully held that reaction low. It was also support there, resistance there, a little support there. So sugar has fallen after a vicious bear market. We had a bear market rally. Or maybe this was the start of a new bull market and we retest the lows. Either way, a double bottom here. Again, we haven't been back to those levels since 2008, early 2009. And more importantly, I like this is very bullish on the weekly chart. You have a clean downtrend line, bullish falling wedge pattern, confirmed with bullish divergence, and a breakout. So I think this is the first leg up in a multi-leg rally with more upside to come. So sugar's looking good. Cattle, livestock, I don't have much of an opinion. In fact, if I'm, usually when I'm bullish on the grains, I'm bearish on livestock and, feeder cattle, livestock, live hogs, all that kind of stuff, because that's one of the largest inputs for farmers is, feeding the, cattle. And so if grain prices are going up, usually livestock prices fall. Either way, I'm just not crazy about the chart. There's quite a bit of resistance overhead. So let me just move on. I just wanted to hit on that if anybody was curious to my thoughts on livestock. All right, JJOFF, coffee. Another one looks good. Again, you've had these downtrend line divergent lows. You can go long on the divergent lows. It doesn't look like much. Coffee can really run when it wants to. This was a 38, almost about a 40% rip off this most recent divergent low. Got very extended. That was a big run, and it took a breather, and that's healthy price action. Nothing goes up forever, and it needs to come down. You need to work off those overbought conditions. So far it pulled back to just above pretty well-defined support level there, about 12, 22, or 23 or so. May want to come and kiss it, come down and hit that level, but it may not. And if it doesn't, I think there's plenty of upside on this one. So again, this one may become an official trade soon. Let's just look at the longer term chart. And there it is. Again, this is, remember, a lot of these commodities are coming off pretty vicious bear markets. Bear markets don't last forever, and commodities don't go to zero. There it is. You had a downtrend line there, big run up. Downtrend line there, breakout, nice rally. Downtrend line here, breakout and a back test. So when we look at the weekly chart, that's beautiful. Breakout, back test, that's an objective time to go long. Can't promise it'll pan out, but I can tell you this looks like an objective entry around these levels, especially if you're willing to give them a little room. And from this weekly chart, I think, move up to at least that 1666 level. And again, there's a potential that commodities may be at or near a bottom. And if so, these might be trend trades that can morph into, multi-month or even multi-year trend trades, and see coffee prices get back to where they were just, a few years ago. That's certainly a possibility. Okay, we're going to wrap it up here. I know the video was long. I spent the beginning just trying to give you my thoughts on the broad market, which I will follow up with another video. But remember, when the opportunities aren't out there, if things are unclear in the broad markets, and that also has to do with a lot of stocks. When you have a strong sell-off or a strong rally, most ships are lifted with a rising tide. So especially stocks that have a high correlation with the broad market. In other words, Apple, Amazon, even Procter and Gamble. If the market is selling off sharply, they're all going to go down. So that's why I'm avoiding a lot of the individual long trade ideas right now and individual short trade ideas to have a little more clarity and focus on or idea where the market in the next big move, the next 5 to 10% move in the market might be. Until then, okay, it looks like opportunities here in commodities. They've been doing well recently, and a lot of those have just pulled back. As I mentioned, I still like treasuries, still like gold. There's some other things out there, and as soon as I see a sector or an individual stock or anything that really stands out, I'll try to get those out there as official trade ideas. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.